So basically a flat performance, no real movement. We're down 0.15% for the day.
Eleni, I can't hear you. Could you take that again, please?
Yeah, we were flat today, no real movement coming through, Kubi. Only losing 0.15%, so a bit of a lackluster day.
On the stock market?
On the stock market, yes.
Yeah, well, we've been seeing the bears. It's been pretty flat. We've been seeing that's kind of range we've been seeing in the past 1 week. I think the bears have had it more than the bulls, with a little bit of a decline coming in day on day. It looks like market is very impressed with the numbers coming through, the company performance. They've been reporting profits. Maybe some companies have missed target. For example, I think one of the most recent reports for one of the downstream oil companies has come slightly off the target they'd given for year end. So it looks like there's a bit of investors aren't too happy with what they're seeing.
I mean, just looking at the oil market, we know that Mobil Oil didn't perform that badly when it released its results a few weeks ago. Within the oil sector, what is your preferred play, Kubi?
Well, I think we're going to see pretty good numbers. If you look at where oil prices are and the fact that part of the subsidy, with the subsidy reforms and everything, I think the oil sector should have a pretty good 2012. And the numbers, like I said, there's one of the most recent results we're seeing from the downstream sector shows that profits are a bit off projections for 2011. But generally, the oil companies are generally in the green, and the dividends, we're expecting pretty good dividend payouts from them.
Let's just touch on some of the other companies out with results, and I'd like to head into the cement companies, Kubi. We saw a Shaka Cement out. We also saw some good numbers coming through from Dangote Cement. It seems that this industry is gaining quite a bit of interest from the investor community.
Yes, and then some of those companies have announced expansion plans across Africa, and if you look at maybe the war-torn countries that are rebuilding, there's a huge market for cement right across the continent. So we expect that there will be a strong showing from the cement sector generally.
What kind of exposure would you want to cement, Kubi? I mean, would you want exposure to all the companies, or do you have a preferred pick in the sector?
Well, some sectors, if you look at the stock market, some sectors have done very well. Maybe food and beverages, especially food and beverages, obviously because, food is a priority. So that would probably be preferred. But however, when you look at those stocks, I think that's what you'd call overweight. They're at their peak. They're very highly subscribed. People bought into them years ago and are holding them because of the dividend returns and the capital appreciation. So you'd balance it a bit with some of the stocks that are much further down. Maybe the financial sector, that there have been some losses. The stocks are, sub 10 naira, sub 5 naira. So you might want to go because that's the bottom of the market, and you expect to see significant capital gains over the medium term for such sectors.
I'd like to touch on UAC. This company also seems to be getting quite a bit of attention recently, and it also released results not too long ago. Are you also giving it the desired attention, Kubi?
Sorry, what company?
UAC, UACN.
Oh, UAC, yeah, well, UAC, again, another diversified company, but that's a company which I would say the stock is mature. Yes, there's a lot of dividends. In terms of dividend payout, is pretty good. I think it's 6%, if I recall correctly from what I read, something about 6% return. And considering what we've seen in the capital markets, that's a pretty good one. However, again, it doesn't compare with what we see in the bond markets and what we see on the money markets. But for the capital markets, that's significant.
Yeah. Okay, so let's just touch on the bond market. And we've had this debate for quite some time, you and I, Kubi. So are we starting to see any kind of movement happening out of equities and, into equities and out of the bond market? Is this starting to occur or not just yet?
I don't think it's occurring yet.
Okay.
Bond yields on bonds are still well into the mid double digits. They're at the very minimum a 13%, more like a 14%. If you look at the bonds with 3 years to maturity, they're above 15%. And after we had our last argument, I went back and did some research in terms of our GDP, I think our debt to GDP ratio, and we're a lot better than the other countries that are having a bit of difficulty in terms of the government settling their borrowings. So it looks like we have a lot of room. I've looked at those numbers. Nigeria has a lot of room in terms of what we can borrow and what we can pay. I don't see us having problems with it throughout 2012 and the next few years. And then at the same time, I think government is going to be pretty aggressive with borrowing because there's some capital projects going on later this year, and I think the bond market is going to remain quite attractive.
So Kubi, I mean, what are you advising clients right now? I mean, what is your sense? Do you think that the bond market is a safer bet than the equity market? I mean, lucrative yields in the bond market, even for me, I must say.
Well, yields are attractive for short term. If you're looking at a 1 year, 2 year horizon, it's obviously the bond market, because you can see your yields on day one. You're sure it's fixed income. You know exactly what you're going to get out of it over a 2 to 3 year period. The equity market is obviously riskier. We see some stocks that are, that are obviously good buys. We think they're good buys. We think they're going to pick up. But the term for those stocks to yield those kind of returns, the kind of returns you see on bonds, is longer. It could be 2 years, it could be 3 years before we see the kind of prices that will equate can get from going into the fixed income market. Again, what kind of time frame does an investor have? The dollar's been well.
All right, it seems we have lost that link to Lagos, and that, of course, was Kubi Momoh, Head of Market Risk at United Bank for Africa.